Most seniors receiving Social Security right now have no idea that 6 things changed in 2026 that are directly affecting their monthly payment, their tax situation, their benefit eligibility, and the long-term security of every dollar they are counting on for the rest of their retirement. Not proposals, not rumours. Confirmed changes that are already running, already affecting payments, already generating tax bills that seniors were not expecting, already creating processing delays that are stretching from days into weeks for recipients who do not know the new rules, and the warning that most seniors have never received, the one that the SSA itself has been trying to get out, is being drowned out by noise, by misinformation, and by the ordinary chaos of managing a fixed income in a system that changes without calling you first. Today that changes. Today we are walking through every confirmed 2026 Social Security warning that most seniors do not know about, what each one means for your specific payment, your specific tax situation, and your specific benefit security, and the exact steps you take today to make sure none of these warnings become your financial emergency. Stay with us, because at the 6-minute mark we're going to show you the one warning that the SSA itself just issued that most seniors are dismissing as routine, and that dismissal is already costing people their entire monthly payment before they realise what happened. Which state are you watching from right now? Drop it below immediately. Because every single warning we are about to walk through hits differently depending on your state, your income level, and which specific Social Security program you are enrolled in. Drop your state below right now. I need to know where this community is located. Here is warning number 1. The one that most seniors receiving Social Security right now have never calculated for their specific situation. And that is already generating unexpected tax bills across the country. From 2024 to 2025, the date of Social Security Trust Fund insolvency moved up moderately, and the likely reduction in benefits that would be triggered has increased. But here is the warning that is affecting seniors right now, not in 2033. The taxation of your Social Security benefit is happening right now, and the thresholds that determine how much of your benefit is taxed have not moved since 1984. Not once. While inflation has pushed millions of seniors above thresholds that were never designed to capture middle-income retirees. The Congressional Budget Office projects that, without legislative changes, cuts would begin as a 7% reduction in 2032, deepening to roughly 28% from 2033 onward. For someone receiving the average monthly benefit of $2,071, a 28% cut translates to roughly $580 less per month, $6,960 less per year. Are you where Belmira? That is the long-term warning. Here is the immediate one. The taxation threshold that has not moved since 1984 is capturing more seniors every single year, and most seniors paying this tax have never calculated exactly how much it is costing them, or whether the strategies available right now under current law could reduce or eliminate it entirely. Have you calculated exactly what percentage of your Social Security benefit is currently being taxed? Yes or no? Drop it below right now. Because the number of seniors paying this tax without knowing exactly what it is costing them annually is one of the most important things this channel has ever looked at. Here is warning number 2, the Fairness Act warning that 3.1 million recipients received money from, and that millions more are still waiting on, and that almost nobody told anyone about the tax consequence attached to it. The Social Security Fairness Act, signed on January 5th, 2025, eliminated 2 reductions known as the Windfall Elimination Provision and the Government Pension Offset. As of early 2026, the SSA has paid $17 billion in retroactive payments to 3.1 million beneficiaries. For many retirees that showed up as a lump sum direct deposit with no advance warning. Not everyone has been made whole yet. Capital Skyline. Here is the warning attached to that payment that almost nobody received clearly. That retroactive lump sum is taxable income in the year it was received. For seniors whose 2025 income, including that lump sum, pushed them above the Social Security benefit taxation threshold for the first time, up to 85% of their entire Social Security benefit became taxable in 2025. Not just the lump sum, their regular monthly benefit too. A payment that was supposed to correct years of underpayment created a tax event that partially took back what was just given. A March 2026 letter from Senators Collins, Cassidy, Cornyn, and Fetterman pressed the SSA to grant maximum retroactive payments to protected spouses back to January 2024, which means more retroactive payments are coming, which means more seniors are going to receive lump sum deposits that create the same tax consequence, without any warning attached to the payment explaining what to do about it. Capital Skyline. If you received a Fairness Act retroactive payment in 2025, and you have not verified how that payment was handled on your 2025 tax return, contact a tax professional before your return is finalised. That one conversation may save you from a tax liability that compounds with penalties if it goes unaddressed. Which state are you in right now? Drop it below. Because as of 2026, West Virginia has joined the states that do not tax Social Security benefits at the state level. If you live in a state that still taxes Social Security and you have never verified whether your specific income qualifies for your state's exemption, you may be paying state tax on income your state already partially exempts. Name your state below right now. Alcadiario. Here is warning number 3, the trust fund warning that most seniors are either over-panicking about or completely dismissing. And both reactions are wrong. The most important thing to understand is that no benefit cuts are occurring right now. Your current payment is not reduced. The danger is a future automatic cut triggered by law if the trust fund runs dry and Congress still has not acted. That is the accurate picture. Not collapse, not zero. A specific projected cut at a specific projected date if specific legislative action is not taken. Elmira, while long-term funding concerns are real historically, Congress has acted to maintain program solvency. Future reforms could include tax adjustments, benefit formula changes, or age adjustments. But here is the warning that matters for seniors making retirement income decisions right now. The reduction in benefits could trigger a 23% cut that would require future beneficiaries to save almost $150,000 to cover the shortfall. Planning your retirement income around a Social Security benefit that may be reduced without building any alternative income sources or savings buffer is a risk that compounds every year the legislative solution is delayed. Nerd Wallet IUWeb. Here is warning number 4, the processing delay warning that is already affecting seniors trying to manage their benefits right now in 2026. Despite warnings that staffing cuts could eventually disrupt payments, monthly benefit checks have continued to arrive on schedule as of May 2026. The operational concern is not that your existing check will stop. It is that processing times for new claims, appeals, benefit changes, and card replacements are stretching out significantly. For someone already receiving retirement benefits, the main practical impact is difficulty getting questions answered quickly. The higher risk falls on people who are in the middle of applying for disability benefits, filing survivor claims, or trying to change their payment information. Elmira. If you have a pending claim, a pending appeal, or a pending banking information change, follow up proactively through your My Social Security account at ssa.gov rather than waiting for mail or trying to reach the phone line. The phone wait times in 2026 are significantly longer than in prior years. The online account is the fastest path to getting your specific situation resolved before a processing delay creates a payment gap. Elmira. If this warning about processing delays is something that affects a pending situation on your account right now, hit the like button immediately and subscribe right now, because the next investigation covers exactly how to navigate the SSA system in 2026 when processing times are extended, the specific online tools, the specific documentation to have ready, and the specific escalation path for situations that are not resolving through normal channels. Subscribe right now so it reaches you before a delay becomes a missed payment. Here is warning number 5, the scam warning that the SSA itself just issued, and that most seniors are dismissing as routine because scam warnings feel like background noise until the scam hits their account. The Social Security Administration recently provided an important warning to retirees coming from the Office of the Inspector General. Scams are on the rise. Retirees need to be aware of signs of scams so they don't fall victim, And here is what makes the 2026 scam warning different from every prior year. Scammers in 2026 are using real confirmed changes. The Fairness Act payments, the Direct Express card transition, the new banking verification requirements, the digital first announcement. As the cover story for their calls, they know about these real changes, they reference them correctly. They sound legitimate because the changes they are describing are real. The only thing that is not real is who they are and what they intend to do with the information you give them. Social Security Administration. The rule that protects you from every version of this scam is simple and absolute. The real SSA does not call you to collect information, verify accounts, or process payment changes over the phone. Every legitimate SSA communication arrives by mail. If a call arrives, no matter how legitimate it sounds, no matter how many real details the caller knows, hang up. Then call the real SSA at 1-800-77-21213. Here is warning number 6, the new senior tax deduction warning. And this one is a warning about money you are leaving on the table right now if you do not act before your filing deadline. The recent One Big Beautiful Bill coming out of Washington introduced a $6,000 tax deduction for every eligible senior age 65 and older. It is in effect from 2025 through 2028, and it applies regardless of Social Security. Most seniors have never heard of this deduction. Most tax preparers are not asking the right questions to make sure their senior clients are claiming it, and seniors who filed their 2025 return without claiming it have left up to $6,000 in deductions on the table. Odario. The deduction lowers the taxable income for some seniors, which can decrease the amount of income tax they pay on their Social Security benefits. For seniors whose combined income sits near the Social Security taxation threshold, the $6,000 deduction may push their income below that threshold entirely, eliminating the taxation of their Social Security benefit completely. Not because the tax was repealed, because a deduction that already exists and already applies to their situation was never claimed. RUWeb Now here is the 6-minute mark. The connection between all 6 warnings that creates a single picture most seniors have never seen assembled in one place. Your Social Security gross benefit increased 2.8% in 2026. Your Medicare Part B premium increased nearly $18, reducing your net deposit. The taxation threshold on your benefit hasn't moved since 1984, meaning more of your benefit may be taxable this year than last. A Fairness Act retroactive payment may have pushed your 2025 income above the taxation threshold for the first time. Processing delays are making it harder to resolve account issues quickly. Scammers are using every real change as cover for calls that redirect your payment. And a $6,000 deduction that could offset all of these pressures is sitting unclaimed on tax returns filed without it. Every single one of these warnings is documented. Every single one is confirmed. And every single one is affecting seniors right now in 2026 who never received a single clear explanation of what was happening to their money and why. Here is exactly what you do right now, today. Before another payment processes, log into your My Social Security account at ssa.gov. Verify your direct deposit information. Check for any open reviews, pending notices, or unresolved items on your account. If you find anything open, address it through the online account rather than waiting for the phone line. Calculate your combined income, adjusted gross income, plus non-taxable interest plus half your annual Social Security benefit, and compare it to the $25,000 single filer and $32,000 joint filer thresholds. Then compare to the $34,000 and $44,000 higher thresholds. Know exactly where your income sits and exactly how much of your benefit is currently taxable. Verify with a tax professional that the $6,000 enhanced senior deduction was applied to your 2025 tax return. If it was not, ask about filing an amended return. The window is open and the money is recoverable. If you received a Fairness Act retroactive payment in 2025, verify with a tax professional that the tax implications were correctly handled on your 2025 return before your filing deadline passes. If you have a pending claim, appeal, or account change, follow up through your My Social Security online account today rather than waiting for a phone call back that may take significantly longer than in prior years. One final thing. The real SSA does not call you. The real Medicare does not call you. The real IRS does not call you about your Social Security benefit. Every legitimate communication from every legitimate agency arrives by mail with a specific notice number you can verify independently. If any call arrives today claiming urgency about your Social Security payment, your benefit eligibility, or your account status, hang up immediately. Then call the real SSA at 1-800-772-1213. Is there a specific warning from today that applies directly to your situation right now? Drop it in the comments and tell us which state you are in. Real situations from real seniors shape exactly what this channel investigates next. And if you are dealing with a processing delay, an unexpected tax bill, a Fairness Act payment that has not yet arrived, or a scam call that targeted you recently, describe it in the comments. Your experience may be the investigation that protects someone else in this community before the same thing happens to their account. What we covered today is confirmed by the Social Security Administration, Kiplinger, Motley Fool, the Congressional Budget Office, and published SSI SSDI. Inspector General warnings for 2026. More investigations are coming. Subscribe so they reach you before the next warning becomes your emergency. The system has rules. You deserve to know what they are. Take care of yourself